We begin with breaking news out of Washington. The Justice Department launching a big probe into big tech. Let's get all the details with Ylan Moy. Ylan.
Well, Melissa, we have just confirmed that the Department of Justice is indeed announcing a broad antitrust review of big tech, and that's likely to include Facebook, Amazon, Google, and Apple. In a statement, Assistant Attorney General Makan Delrahim said that without the discipline of meaningful market-based competition, digital platforms may act in ways that are not responsive to consumer demands. He went on to say that the department's antitrust probe will explore these important issues. Now, the focus of this new inquiry will be whether companies have reduced competition, stifled innovation, or harmed consumers. And the review comes as big tech is also under investigation by Congress. The companies were forced to testify on Capitol Hill to defend themselves against allegations that they are monopolies. Just this afternoon, the congressman leading that effort, David Cicilline, criticized their answers as evasive, incomplete, or misleading. Now, the Justice Department is launching its own review. Melissa, this is not officially an investigation of any single company, but it could certainly lead to that. Back to you.
And Ylan, a couple months back, or maybe a month ago, we heard news that the FTC and the DOJ were basically divvying up what we consider big technology. This specific release, though, says dominant online platforms, which leads you to think that Apple may not be included in this group.
Well, it's unclear at this point. They don't name any specific company names in the release. But one thing that was decided on earlier, we thought, was who would have jurisdiction over these companies. These are big reviews, big companies, complex issues, and it seemed that the regulators had agreed to split that up. Now, this review appears to go beyond that and be bigger than that. Are there going to be turf battles that could perhaps jeopardize the speediness of these reviews and inquiries? We will certainly have to see. But clearly, the Department of Justice now making this on the top of the agenda.
All right, Ylan, thank you. Ylan Moy in Washington for us. She'll keep us updated, of course. And we are seeing declines across the board, most sharply in Facebook, Amazon, as well as Alphabet, which are each down more than 1%. Guy Adami, you're an investor in these names, as many people out there are. How do you trade this?
Yeah, the one that scares, the one that scares me the most, well, it's scary, number one, for the three names that you just mentioned, and they're all down. It makes sense that they're all down. It probably makes sense that Apple's, I would imagine, down small, if not unchanged. But, Amazon into earnings on the 26th. Now with this headline, you go back and look where it topped out, look where it traded down to, look where it just retested. Now you say to yourself, am I playing in the deep end of the pool? So, I don't know if earnings will necessarily matter now for Amazon, Facebook, and Google. I still think Facebook sets up well, but these headlines, and I'm going to try to read through the press release, that's got to be a little bit frightening, I would think, right?
We were talking just yesterday about how to trade headlines, sort of amorphous, bad news headlines, and how you sort of factor that into the stock. Here we are, hitting the biggest part of the stock market.
Bad news headline, right.
How do you think about this?
I think about, this is going to be irritating for a really long time, right? I don't know how, we don't know. So we don't really have much clarity except that there's a more formalness to it, right? The thing that I hate about investigations like this, they go on and on. They are a tremendous distraction, right? So you need to staff up for it. You need the attention of very senior people, plus I don't know how many additional people they'll need. Now, they're all big companies and they can afford it, but the distraction of management time is a little... That's unfortunate because, this is what they do. They don't do these kinds of projects. So, I think, Guy is sort of alluding to it, I think earnings can be okay if they're good, and if they're bad, right? So I think it sort of takes some of the upside away from good earnings.
You draw this out to the worst case scenario, and that would be some breakup.
Is that the worst case?
I don't know. I'm just thinking of one scenario, and there is an argument to be made that you break up some of these companies, and actually they might trade higher because you're unlocking sort of a pure play, you're unlocking value, and all of a sudden you'll have parts of companies that will trade as pure plays.
Although, if you think about the part that is the engine of concern for FTC, DOJ, don't forget about House Judiciary Committee. I don't know you can break up Google's search engine. I don't know that you can really break up Facebook's platform. Yes, you could break out Instagram, you could break out, YouTube, and some of the parts I do think we would find this actually to be a very interesting exercise, especially for Google and possibly for Facebook. Yeah. The only other thing I'd say about this is very ironic that this is coming full bore from all sides. They've figured out their lanes. They're coming at it. at a time when we're essentially fighting China's desire to build superpower national champions that will dominate the world like these companies
and
have.
We're attacking
tearing down our biggest and best companies at the time we're fighting this battle over global supremacy. Makes no sense.
Yeah, I think this is just a lot of headline noise. I mean, typically in the past, these have been great opportunities to buy on the pullback. There's no company-specific target right now. Quite frankly, I don't think there's really much to do with regards to a breakup of Amazon. And when I look at Amazon, the long-term thesis is still intact, right? I mean, this is a great company. You look at their high-margin businesses like cloud and advertising that are just growing like crazy. I still love Amazon.
By the way, on that big full screen that we were showing of all the stocks, we didn't have Twitter up there.
Right.
Twitter was sort of the last move. It is now down by 1.2%. So it may not be big in terms of size compared to some of these others, but in terms of what it does have sort of a dominant position in that. I mean, nobody else really does what
news delivery.
Twitter
I mean,
does.
I don't know. Breaking. Yes, I understand. Maybe Twitter's collateral damage in this. I wouldn't lump them in. I mean, look. I mean, we can say it right now. You mentioned the three companies, and absolutely, the three companies that are clearly in the crosshairs for a number of different reasons, many of which Tim alluded to, are Facebook, Amazon, and Alphabet. And those are the ones you have to be concerned about. You know, if there's ancillary damage to a Twitter, that's to me an opportunity. But I understand what Mark is saying, but this is a pretty draconian headline. You got to read through some of this stuff. But to Karen's point, this doesn't end in a day. This lasts for quite some time.
For more on this, let's bring in Gene Munster of Loup Ventures. He joins us on the Fast Line. Gene, what do you make of this news?
Well, Melissa, first, the truth is going to lie several layers below what these headlines are, and I think it's important to note that. I had some flashbacks to May 5th when the trade war escalated, the tensions escalated with China, and we tried to extrapolate some of the impact to Apple, for example, and took months to figure this out. I think it's similar here, as we need to just take a step back and look at what are kind of the anchoring themes here, and there are three of them. The first is privacy is important. Second is this concept of antitrust. And the third is consumers need to be better off. And those three are difficult to get to balance. I think for regulators to try to balance all three of those is going to be difficult to have any significant changes on these companies. Absolutely agree. Facebook and Google are the prime targets here. Apple, even though it has trades at a discounted multiple, it is the company that has the least risk here. But if I was going to guess how this plays out, it does have a nominal negative impact on the multiples of Google and Facebook over the next several months. And I suspect that ultimately there's some changes in terms of how privacy is shared. But just want to emphasize one last piece here on that consumers better off component is that's really hard to pull off. Consumers love free products like Instagram and Google Search. And the question is, will regulators want to break some of these up or further regulate them that may cause fees or more advertising around that? And I suspect that that's going to be a difficult hurdle to bring all three of these together.
So just to take Facebook as an example, since we are expecting Facebook earnings tomorrow after the bell, so it's sort of in focus. It also had a huge run up so far this year, up more than 50%, Gene. If you think about that, do you think that an ongoing investigation like this could hamper any efforts for Facebook to ramp up monetization of some of these other platforms?
Absolutely.
Okay.
Yeah, I think that is, you need to look at this judiciously, and I think Facebook is, and Google has some about how they give their search results, display their search results, but those two are the most obvious ones, and I think most investors will, that will have a negative impact on the multiple. Now, the results tomorrow are going to have a bigger near-term impact, but undoubtedly this will be, as I think Karen was talking about, overhang on these shares for months to come.
So if we are to think that monetization of WhatsApp and Instagram, for instance, is pulled back or at a standstill, whatever term you want to use at this point, and maybe even the rollout of Libra, given all the backlash it's already faced, is also delayed, what kind of discount evaluation do you put on Facebook that had been banking on all these things happening at some point in the future?
I think when you put it all together, if they cannot pull off, or better said, if they can't accelerate some of these other monetization opportunities that you just outlined, you go from what's a 25% growing company today to closer to 10%. The multiple should go from 21 times next year to probably closer to 10 to 15 times. And so I think it can have a material negative. Now, I don't think, I just want to be most clear, this isn't going to happen overnight, but if that would be, I think, the one end of things don't turn out well for Facebook, how that would play out in terms of the stock.
Which company would be the most damaged in your view, or is the most vulnerable, do you think?
Yeah, undoubtedly Facebook. I mean, that if I had 10 points to distribute, who's at most risk here, I would give 5 of them to Facebook, 3 of them to Google, and 2 of them to Amazon, and 0 to Apple. I think there's no risk to Apple.
All right, Gene, thanks so much for phoning in. We do appreciate it.
Thank you.
Gene Munster of Loup Ventures giving us his analysis on this. Karen, you're a Facebook shareholder, you're an Alphabet shareholder.
Yes.
What do you think of Gene's
So you love the
distribution of
headline.
risk?
I love that their
Really feels
multiple would be cut in half. Was that basically what he was saying?
Basically.
That seems a little much, but there's a lot of money to lose between here and there, right? So I don't know. I really got to think about this. And do I, this is so 2 separate things. We have earnings and we have this. Which is bigger at the moment? Earnings, I think, just for the very short term.
Right.
We kind of had this conversation in our good, bad, and ugly yesterday because these were the names. But so if I look at Facebook, the other thing, let's remind ourselves that June 3rd was the day that we really had the shot to the bow on these names. And you had Facebook down 7.5%, Google 6.3%. Since that low, by the way, that low was a market bottom. That was a dramatic moment for the market when we had all that bad news. Market has gone on to set new highs. Just know that in terms of how the market could respond to news like this. I realize it's the second or third shot. Facebook's up 26% from that point. Google 10%. So we can tell who's already suffering under the weight of not only their own issues, but I think a bigger regulatory hassle, if that's a term we can use. Facebook, to me, is absolutely, from a trader's and a fundamental perspective, with that kind of move into earnings, with 2 big bright lights on them in terms of Libra coin and privacy, and then antitrust, Facebook I'd stay away from.
Mark?
Look, I think a lot of it's just it's all headline noise, headline risk that could compress the multiples a little bit over the short run. But these are things that take years to play out in court. These are still solid companies. I would still be buying them. I think earnings are more important right now. That's what I'm focusing on.
I hope earnings. No, I hope he's right. I mean, I hope earnings are more important. I think the fact that it will take such a long time, I mean, that casts a bit of a shadow for a while. Look, I mean, it's about trying to figure out what the opportunity is. To Tim's point, these stocks have had tremendous runs, at least Amazon and Facebook. And you look at Amazon into earnings now, you really have to wonder, do you want to try to play it from the long side into earnings with this headline risk out there? And it's interesting, quickly, Gene said Facebook's 5 points out of 10. Yeah. Which I sort of get, but you talk about stifling competition. I mean, that's been
Amazon
for a long time, yeah. And that's one of the headlines that I'm reading in this DOJ
Plus, there's
headline.
The political Bezos. You can't help but think with this administration, who went after AT&T, Time Warner, when it was such an obvious loser, that there's some other.